Well, good morning, everyone, and welcome to today's webinar, where you can improve prompt payments and ledger accuracy. Being able to pay your suppliers on time and accurately is obviously one of the foundations of good business practice. And having good supplier relationships and supply chain security can have a positive impact on procurement and minimizes the risk as well. Being able to do that accurately and efficiently has a direct benefit to the organization's bottom line. So today you'll be hearing from Charlotte Line, who's the Financial Controller at Unipart Logistics. Charlotte qualified as an accountant in the NHS and moved to Unipart in 1998 to work in the finance department in Unipart International. She then moved into procurement, where she sat her 6th qualification before returning to finance to lead the finance shared services function. And as most of you know, I'm Ellen Leith and I'm the Director of PPN. We'll also be hearing from Dan Kimpton from statementmatching.com, who'll be showing you how their solution can help overcome some of the issues around ledger inaccuracies and delays in payments. Right, so before I hand you over to Charlotte this morning, here's a quick look at the agenda. Charlotte's going to give you some background into how things are done at Unipart and what their vision for the future is and why she believes that statement reconciliation is an important part of that. The session is interactive and you do have the opportunity to ask questions as you go along, and you can just add those into the free text box in the GoToWebinar panel, which is just in the right-hand side of your screen. So if you type these in, I can ask Charlotte or Dan to address them at the end. And for those of you on Twitter, you can also join in with some of the issues raised in the webinar as we go through the webinar and also afterwards by using the hashtag AskPPN. Okay, so with that, I'd like to hand you over to Charlotte Line of Unipart. Over to you, Charlotte.
Thanks, Ellen. Good morning, everyone. As Ellen said, my name's Charlotte Line, and what I want to do today is just to really show you how we can use automation and process improvement to improve our payment on time. As we all know, this is very topical with the new rules on reporting payment practices, policies and performance, which came into effect this April. Not only can we use automation to improve payment on time, we can also use it to improve our ledger accuracy and to drive process improvement. So I work for Unipart Logistics, which is part of the Unipart Group. The Unipart Group is one of the largest private companies in our sector. We are one of Britain's largest employee-owned companies, with the majority of our shares being held by employees. Unipart is a diversified industrial company whose operations include manufacturing, logistics and consultancy. Sorry, I'm just moving the slide on. Thank you. And consultancy. The group employs 10,000 people across the UK and in approximately 15 overseas locations with an annual turnover in excess of £1 billion. Unipart was originally a division of the vast state-owned car manufacturing British Leyland until a management buyout 30 years ago gave us our independence. A manufacturing division still produces components for the UK automotive industry, and our logistics division provides global supply chain services to leading companies in the telecommunication, automotive and retail fields. Another division provides specialist logistics and remanufacturing for the railway industry, and the group has a further range of manufacturing plants and parts distribution services in Europe, the Middle East and the USA. As I said, we've got global coverage operating in lots of companies around the world, and you'll see some of these brands that we deal with across these different sectors. When we became independent from British Leyland, which like much of British industry in the 1980s was known for its poor productivity and terrible industrial relations, it was clear that we needed to find a new way of working and a new approach to employees. Thus, the Unipart Way was born. Based on the best practice from Japan and around the world, this lean way of working was a move away from command and control to performance through engagement. Such high levels of employee autonomy are great for driving employee engagement and thus customer engagement, operational excellence and innovation, but can make life really hard for AP, which in a world where our processes and automation really do want a rigid and a command and control environment, this does not make things easy. So, for example, this means for us, although we recognise the benefits from a world of 100% POs, getting the business to actually agree to this is another thing. We need to convince rather than to dictate. Ellen, can you just move the slides on? And actually another one. So I look after the finance shared services, a team of 30, which includes not only the transactional elements of finance, AP, AR, banking and cash management, but also the financing for the company. But I also have office services, which includes telephone exchange, post room, mailing and reprographics. New this year, we've also developed a management accounting team, and this was really born out of a desire to live up to one of our principles, which is about developing people from within our company. We have had a lot of success in terms of promoting people from shared services into the more commercial or technical areas of finance. However, we noticed that some of them were struggling with that jump. So to help support this, we've decided to bring some of the work that they would initially do in those roles into shared services and help smooth the transition for our people. So moving on to accounts payable, in that function, although we've got 11 people, we do have quite a few part-time people, so that's the equivalent of 9.5 full-time equivalents. We have recently restructured and moved everyone around in our shared services department, so although this does help in creating an agile, multi-skilled team for the future, it does mean that at the moment we're going through a period of upskilling our team. While we did this, we also took the opportunity to ring-fence one person to look solely at process improvement and controls. In terms of processes, the AP team look after the standard AP processes, including invoice processing, expense processing, payment run creating and checking, intercompany agreements and statement reconciliations, as well as dealing with any queries. We process about 110,000 invoices a year. In terms of systems, we're using SAP, and we actually use SRM, the purchase ordering system. In terms of invoice automation, we're using Process Director to not only OCR, we scan and OCR our invoices in and then send them out on workflow when required. And actually, we've also introduced an internal app for new supplier approval for supplier onboarding. Thinking about the challenges, I mentioned that as we've just restructured shared services, we're going through a little bit of upskilling, so there's quite a bit of training going on at the moment. But adding to that, Unipart Logistics has also been through a restructuring process. As I said before, we're not a command and control organisation, so that does make life quite difficult sometimes for us in AP. And actually, we've only got about 40% of our invoices covered by purchase order. Also, as well, we don't have all the invoices coming in to one central point. Often they'll go out to the business before they come into the accounts payable department. So again, that can add a bit of challenge. And we have got a couple of vendors where actually, because of data integrity issues, they are producing too many errors to actually help with automation. So some of those we're actually having to process manually. I think like all AP departments, we're all going on a journey, aren't we? We implemented Process Director in 2014, and this is where we either receive our invoices by email or those ones that are received by post are then scanned first before all our invoices are OCR'd and transferred into SAP where they are matched, or if not, they then automatically sent out on workflow. Initially, we did this just for our overhead suppliers. For various operational reasons, We didn't move our stock suppliers onto the automated processing system until 2016. However, as I mentioned before, we do have some suppliers where for data integrity, this really isn't working and we're having to process them manually until we can iron out some of those issues. In 2016, we also introduced our statement matching, which we're going to have a look at in a minute with Dan. And we've also introduced an app, as I said, for new supplier onboarding. And really for us, 2017 is looking at digitalisation as an enabler. And I think this is a real shift actually in the way we're all looking at technology. Before, we were really trying to change our processes to fit in with the technology, whereas now we're now looking at how can we use technology as an enabler to help us work better. With our background in lean techniques, our journey for AP has really focused on the value stream map for paying a supplier and how we can improve this. Our overriding goal for AP is to pay as many suppliers on time as we can. Thus, our primary KPI is the payment on time. I suppose I am lucky in that I've worked for a company where we never not pay suppliers on time for cash flow reasons. If an invoice is approved and it's due for payment, it's paid on the next available payment run. We also have no backlogs in that we process all invoices as they are received. Therefore, if we don't pay on time, we know it's down to receiving late or queries or being on workflow for too long. So we really now are trying to focus on those two KPIs as well to try and improve getting our invoices through the system quicker. I'd love to say, after attending the latest Purchase to Pay Summit in London, that we are really focused on the value our AP team is adding, especially in terms of controls and the risk, of fraud or error. However, to be honest, I think, yes, we are obviously deeply concerned about risks, and that was one of the reasons why we ring-fenced this one role to really focus on controls and process improvement, but we really do feel the pressure to be cost effective. So therefore, I'd say our secondary KPI is really about the cost per invoice. As this is a factor of your total cost and the number of invoices you process, both of which are hard to amend in the short term, we look at other measures for, if you like, efficiency. So looking at automation and the cycle time of processing our invoices. So why did we do statement reconciliation? Historically, it was always to ensure ledger accuracy, wasn't it? Unfortunately, I'm old enough to remember a time when this was a really big thing at year end for auditors. Now, unfortunately, they are slightly harder to please. So they were always done at a fixed point in time. So you could say your month-end position was accurate. Our lean principles would lead us to believe that we really shouldn't need to do statement matching, as our processes should be engineered in a way to avoid such defects. However, as I've said before, here in AP, we don't operate in that command and control environment where we can enforce 100% PO or we can ensure that all our invoices come straight into the department, and nor do we operate in such a perfect world. Even with OCR and automation, we still make mistakes. Sometimes, you might capture an invoice as a credit note or vice versa, or invoices go missing. Actually, we had one this month, really recently, when we did the statement reconciliation, we realised there'd been an issue with the supplier's system, and they actually hadn't sent us any invoices at all for the month. Also now, we're all using statement reconciliations to really improve accuracy of our invoice processing as well, to identify those issues before they impact on our payment on time. So what did we do before? Historically, our statement matching, I think, was very like a lot of other people have done historically or might still be doing. It was really based on Excel spreadsheets, VLOOKUPs and some macros. So we would take downloads from SAP and our vendors. It was seen as actually quite a technical and difficult job to do. Thus, not all of our AP people could actually do the statement matching process. And actually, it took an awful lot of time. I will talk about this in a little while as well. So what we found is actually we'd focus all on our time on actually doing the statement reconciliation, which actually left us no time to actually complete the actions. So a lot of the time then you would actually repeat the same actions the following month because you hadn't had time to correct anything. We also had to create separate management information so we knew where we were. It wasn't really user-friendly, and as I've alluded to, it was only a month-end view, so sometimes your data could be quite old. So why did we choose statement matching? If I'm honest, we actually did it as a trial following a user group, and the team just loved it so much. It seemed that actually, although we hadn't seen it, we knew it was an issue, but it was not one of our top priorities for that year. It was just such a easy, quick win. It felt like a no-brainer to do this. And actually, those of you that have implemented statement matching, you'll see it's really, really easy to implement. There's very minimal IT support, and people who work in larger companies will probably really appreciate that. It's very integrated, so it integrates with SAP and our invoice automation solution. It's very cost effective as well. There's no huge, big upfront payments. And what I do love about it is it's a flexible agreement. So I can vary how many statements I do each month. Easy to vary the volume. I can vary who I do the statement for. There's no IT purchase and there's no minimum term. So actually I could walk away whenever I want. Very limited training. I actually don't think we really do train our people how to use it. There are some help guides and things like that, but it's just quite intuitive. It is a bit like ordering off Amazon. People just seem to be able to do it. As I said before, what are the benefits for us? The team really do enjoy it. It's very user-friendly, and actually everybody can do it, even new starters. We've actually had somebody on work experience this week, and they've even managed to use statement reconciliation without really understanding accounts payable. But the big takeaway for me is about agility. I think historically we were always confined to a position as at a month end, whereas now, because you're using a daily feed, you're always looking at actually what is the position as at the end of the day. So that gives us much more agility. It makes sure that our ledgers are always accurate. And I think in this fast-paced moving world, we've actually got to move away from looking at our month ends, and we've just got to be a lot quicker and a lot more up-to-date. Therefore, as you've got the most accurate up-to-date information, it really improves your chances of payment on time. In fact, we've actually improved our payment on time figures by 20% as a result of all this process improvement activity we've been doing. And what that does, obviously, it reduces the queries coming into the team. You're solving those problems before your suppliers have to email you or phone you. Looking at the benefits, obviously it easily identifies any missed postings. So actually you can feed that back into your AP team to help in training. It identifies any missing invoices and credits. So, you can get those on actually before they impact on your payment on time. As I said earlier, very easy to vary who you do your statement reconciliations for, how many statement reconciliations you do. We don't need separate management information because actually you've got all your management information there, and actually you can use that for supplier reviews. So actually you can look at how many suppliers are sending you duplicates, how many suppliers you're actually having problems with because you're missing invoices or credit notes. So you can then feed that back to your suppliers to improve your processes. We don't need to keep separate copies of any of our reconciliations because they're all stored and all the archives are there for our previous versions. And it actually creates an audit report for us, which looks very professional. It's very easy to understand, and you can use that to send out to your suppliers so that they know exactly where they are as well. And I think the very big one for us, the big win for us, is about speed. Before, when we were doing an Excel statement rec, it used to take us about 60 minutes to actually do the reconciliation, whereas now it takes less than 3 minutes. A PDF one as well will take us 15 seconds now to actually do the reconciliation, whereas before it was taking us 65 minutes. So now you can spend all your time on looking at the actions, what is that statement rec telling you, rather than actually trying to just create the numbers. One of the things that I do find quite interesting when I've spoken to other people that use statement matching is how much your team really enjoy using the system. So I did actually ask one of the guys in the team, what is it about statement matching? And actually it's quite interesting because this is what they said. In the past, we spent a lot of time reconciling our statements using Excel, obviously VLOOKUPs and things like that. When you have a lot of invoices to match, this can take up hours of your valuable time. Since using statementmatching.com, we have found that reconciling statements is so much easier, quicker. It identifies the status of each invoice for you. This leaves you with just investigating any errors bit that are identified. And for them, that's the bit that they enjoy. That's the bit that actually challenges them and gives them that they enjoy. So what's next for us? As I said before, really for us, it's about digitalization. How can we use technology to actually work for us and improve our processes? So we're looking at our payment run process at the moment and how can we improve that? We're also looking at how do we interact with our suppliers? How can we actually almost get them doing more, helping themselves more? So, there's a supplier portal that we're also looking at. We also have our own duplicate matching report that we use internally, but one of the things that we're looking at is actually, would it make more sense to use one that has probably slightly better configured reports and for us to look at that system. So that's another thing that we're looking at using in the future. So before I hand over to Dan, I just want to really summarise really the benefits and almost the before and after. As I said before, actually we were struggling with our payment on time, and now we've actually managed to improve that by over 20%, which is fantastic. I think speed is a really great thing. As I said, 60 minutes down to sort of 3 minutes or 65 minutes down to 15 seconds. It just gives you so much more time that you can use, adding value to your organization rather than just, creating the numbers. I think because as well it's so intuitive, it's opened it up to all of the team. Anybody can do the statement reconciliations, and we use them just really, really quickly. If you've got a query come in from a supplier, just whiz a quick statement reconciliation through the system so that you can get a total picture before you actually speak to the supplier. As I said before, it's about spending time looking at the actions and doing the improvements, not creating the numbers. Also, the management information is really good, and having the automatic online reports that we can send out. I think also the up-to-date information, not being month-end dependent, that is really, really important. And actually, if I could take one thing away from this, it would be about being a more agile agile department and moving quicker. So that's all I've got to say. I'm now going to hand over to Dan, who's going to talk you through the system.
Thank you, Charlotte. I was going to say good afternoon then, but yeah, it's morning still. So good morning, everyone. I'm just going to give you a quick overview of the system, and just that you can see what it looks like from a user's perspective. So how the system works is we basically take a daily feed from the customer's ERP system, as Charlotte explained, and to get statements into the system, you can actually import Excel statements directly into the system. So you just basically map the Excel sheet saying, where's the invoice number, the date, the amount, the currency, that kind of thing. And then to get paper and PDF statements into the system, you can just forward the PDF ones onto us, scan the paper ones to an email address, and then as part of the service, we'll extract the data, and then it'll be on the system reconciled within 24 hours. And then what the system does is when it reconciles it, it gives each statement a status. So at the top, I've got some statements in the system that are fully matched. So that means all the invoices on the statement are on your system, and there's no unpaid invoices on the vendor's account that are not on the statement. So there's kind of no exceptions there. And then moving below, I've got fully matched with data mismatches. So that means you've got all the documents. But if you look at the bottom of the slide where it says statement lines, you can see I've got some where the amounts are different, dates are different, invoice numbers are wrong, that kind of thing. But then the next two, these are probably higher profile, because unpaid items missing on statement, that means you've got invoices on the ledger that are unpaid but are not showing on the supplier's statement. So if they're on your system unpaid but the supplier's not showing them, then they're potential mispostings and duplicates. And then lastly, incomplete matching. That means that there are documents on the statement that are not on your system. So it's missing invoices, missing credits. So what I'll do is I'll show you a couple of examples. So on the dashboard, I've got some key reports. So my missing credits report, if I were to run that, it's going to give me a list of statements with missing credits. So you can see it puts the highest value one at the top of the list. And then from here, you can actually drill into the detail. So this is what the reconciliation looks like. I've got the statement data on the left-hand side and then the invoice data on the right. So on this example, you can see that everything's matched apart from the first line, which is the missing credit. So what you can do is email the vendor. You can actually do it from this system, or you can download the report and then do it from your own email system. But basically the vendor gets an email and they get a PDF attached to the email. So I'll show you what that looks like. So this is generally branded, with the customer's logo in the top left. You can see where the credit is missing. We've inserted some text to say we need a copy. But then because I know the status of the documents on the customer's ERP system, I've got some that are posted, so I've got a due date for payment, and I've got one that's paid, and you can see that there's a payment reference. So the whole idea of these reports is to obviously do the copy request, but then you're actually giving the supplier the status of all their documents, which means you get fewer queries into accounts payable. You can also download this data to Excel as well if you wish. And then back on the system, what we always tell people to do in the training is you should add notes. Now, you can add notes at a line level. So if I've just done a copy request, if I add a note at a line level, you can see actually I've requested this credit, once before already. Because the way the system works is if I get a statement from this supplier next month, that goes on the system. If this credit's still missing, I'll be able to see that I've already requested it the previous month. So it kind of builds up like an audit trail. So the next example, I obviously got to that example by running the missing credits report. Now what most shared service centres do is they use the search screen, because from here you can actually search for statements based on company. So if you're a shared service centre, you might be working by country, which would be company code X, Y, and Z. You might be responsible for certain suppliers. So I might look after A to C, for example. You can also select statements at different statuses, so I probably don't want to see the fully matched ones because there's no exceptions. But basically, if you hit search, it's going to give me a list of statements to work on. Once I'm on this screen, I can actually sort it by, statement date if I want. I can sort it by statement value as well. I've got a big statement at the bottom of the list. So that's fully matched with data mismatches. I'll show you this one as an example. So basically, you select one from the list, it takes you onto here. Now, this is quite a big statement, this one. There's nearly 500 invoices. So what you can do is actually filter it to just show the errors. And then I've got my errors to work on. So I won't go through each one of them, but you can see, I've got some where the amounts are different. So it looks like on the first example, it's been keyed onto the ERP system with an extra 1 in front. I've got a really big error on the second line, which is debit and credit the wrong way around. But you can see, it's really easy to upload statements, and then you can just show all errors, and then you've only got the exceptions to manage. So moving on, going back to the list, I'll show you an example where, it's a potential misposting or duplicate. So that's the one at the top of the list. So if I select that, it's going to show me the statement. Everything on the statement is matched, which is good. But then if you look below, I've got an entry. Basically, I've got an invoice on the vendor's account, which is unpaid, dated the 25th of February 15, 286.80. And then if you look up on the statement, the oldest invoice on the statement is March. So this is probably a duplicate of Feb's invoice, because I've got one for the same amount in March and one for the same amount in April. So I just wanted to show you 3 quick examples, typical reconciliation examples. From a reporting perspective, you can select reports, you can select statements by status, so I showed you in the missing credits report. We've also got missing invoices report, debits and credits the wrong way round. We've also got some suppliers reports. So you can see on the right hand side, I've got critical suppliers. So a lot of my customers have got a list of suppliers that they reconcile every month. So you can mark them up as critical in the system, and then you can make sure that you've reconciled your critical suppliers, this period, whether that be a month or a quarter. I just wanted to give you a quick view of the Supplier Portal as well, which Charlotte mentioned. This is the kind of next step, because the Supplier Portal uses the same data that I'm already using for doing statement reconciliation. So basically you can give suppliers access and you can just invite them from the system. You can either invite them individually or you can invite them en masse. And by en masse, I mean that any supplier with an open invoice would get an invite. And it would take them to the dashboard where they can see their invoices. And then if they go to the My Invoices tab, it would list all of the invoices that you've got for the supplier. And again, it's similar to what I just showed you on statement matching. I can see the statuses, I can see due dates, I can see one that's paid there as well. I can also enter a payment reference or an invoice number to do a search as well. But I can also go to My Payments tab. Now, if I went to My Payments tab, I've got 2 payments on my demo system, and then if I select one, it actually displays the invoices below which relate to the payment. So if I'm in AR on the supplier side, this is really, really useful information to, to clear my payments down, to clear my invoices down. But the bit that I really like and is really cool, you can actually let suppliers upload their own statements. So it's similar to the process for doing it on the accounts payable side. The supplier would just upload their Excel, and then they would basically tell the system which column, the invoice number, the amount, and the invoice date. And then once they hit import, the system reconciles it immediately and the supplier can go and look at the results. So again, this is familiar to you from the screenshots before. So I can see there are some problems on here. There's 3 missing invoices. I can see there's a currency problem and there's also a debit and credit the wrong way around. It looks like I've sent you an invoice and it's been put on your system as a credit. And of course, you can see the same results your side. So if there were, errors on here, you would see them on the statement matching side. So hopefully that's given you a quick overview of the system. What I was going to finish on was just the fact that what we do with all customers, and Charlotte was the same, is we do a free proof of concept. So you can give us data for say 1 to 10 vendors, just download it into Excel, give us all of the open items, 3 months worth of paid, send me the statements, we'd set the system up, and then we do an online training session, and then you've got a 4-week period to kind of see the system working with your data. People can email us after the call, obviously, but just to let you know how the pricing works, it's a monthly subscription, which is fixed based on the annual volume of invoices you process, and then there's a variable charge based on the number of statements you upload. And you haven't got to go and beg for money for a 3-year agreement. It's just a 30-day rolling agreement, no minimum term. So in summary, I think if I was to summarize it from talking to all of my customers, it really enables customers to reconcile more statements, because I think everyone wants to reconcile more, but it's one of the first tasks that gets pushed because you simply don't have time. And I think if you are identifying missing credits and then going to get them from the suppliers, and you're identifying missed postings, potential duplicates, that's going to help the bottom line. And I think, you do get good feedback from suppliers, because if I'm on the AR side and, you're reconciling my statement and sharing the results, I can identify that you've got missing documents, and then on your side, you're going to get fewer queries from the suppliers. So I'll hand back over to Ellen, and we can take questions.
Okay, thanks Dan, and thanks for Charlotte earlier as well. A really informative webinar for everybody. We have had a couple of questions through, and one of which was, you said it was easy. Can you say how long it takes to implement? Hello? Okay, I think we seem to have lost the sound there. I think we can wrap up the webinar here now. And if you do have any questions, then we can then come back to you, revert back to you afterwards. But the slides, as I say, will be available afterwards. Are you back on the line? Okay. So going back to the question, you said it was easy. Can you actually say how long it takes to implement? And I think you can perhaps each answer that. Perhaps is that you, Charlotte?
I'm on the line, yes, so I can answer that. Obviously, I can't tell you. It felt like minutes. It's not really difficult because all you do is you say to your IT that they need to your SAP, or if you've got somebody who's good at running SAP reports, they can do it. You set up running a SAP report, and literally then you just have a sort of a web address that you go to and log in. So it's almost the sort of thing that you decide you want to do, and you book your hour training session, but actually it is quite intuitive anyway, and you're up and running. It should actually take you hours if to do really.
Okay, thank you. And I think the next question is probably for Dan.
Lovely.
What sort of size customers do you have in terms of invoice volumes?
It varies really. I mean, Unipart process about 100,000 invoices per year, and I think if I looked at the minimum, the minimum volume of invoices, we've got customers processing about 20,000 invoices per year, and then if I look at my biggest customers, they're processing about 3 million invoices per year. But probably this, the sweet spot is between 100,000 and a million invoices. That's the most common.
Okay, and how would you get statements into the system?
So 3 ways. So you can import Excel statements. So you can just upload Excel statements, map the columns, and then they're on the system immediately. Paper and PDF. For the PDF ones, you would just forward them to an email address, and then as part of the service, we extract the data from the statement, and then it will be on the system reconciled within 24 hours. And then for paper statements, it's the same process, apart from you have to scan it to the email address, and then we take care of the rest.
Okay, thanks, Dan. And we have had 2 or 3 questions about the slides as well. They will be available afterwards, as will the recording. But if anyone's got any further questions, then of course let me know, and I can get those answers back to you, either for Charlotte or for Dan. So please look out for our next webinar, which is on the 22nd of June, where we'll be looking at how e-invoicing is helping public finance to trap fraud and error. And I hope you'll be able to join us for that. But for now, thanks again to Charlotte and to Dan, and thank you all for joining us. So enjoy the rest of your day. Thank you.